If you want to trade like a rebel, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. The guest speakers, as soon as we announce those, this thing's going to be sold out, limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.
Bang! That's always there, Pete, just to test the mic. That's why I do it.
Jared, do we need to test the mic?
And because it annoys Jared, the producer. Welcome back, folks.
Yeah.
This is the Rebel Edge for August 25th, 2022. We appreciate you joining us. We know that you've been asking over and over again on Twitter for unusual activity. Remember, Pete always does the take at 10:30 a.m. Eastern time, 5 days a week. Yeah. So that means you can get unusual activity because Pete hits that, and I do too, at 3 p.m. Eastern time. One of yours today, Pete, was Pinterest. So I'd encourage folks to go to the YouTube channel. You just go to YouTube, type in Market Rebellion. It's free. You can register. There are 2,800 plus videos there that we've done. So unlike some people, we actually have a timestamp on all of these calls, whether it's a put or a call. We have timestamp on when we made the, if you want to call it a prediction, Pete, and how it turned out. Just go to the YouTube channel for Market Rebellion and you can see exactly what we said on the day we said it. But anyway, Pete, what do you say we kick it off with some Chinese stocks today?
We got to get through this quick because I'm going to the state fair today, the Minnesota Great State Fair. They're getting great good together, all that kind of stuff. I'm excited, John.
Well, we're going to get a lot of reporting from Pete at the state fair, folks. But these Chinese stocks, I mean, in the last 5 days, since Thursday a week ago, the Chinese internet stocks, according to KWeb, which is an ETF of that, is up 11%. The average Chinese internet stock is up between 9 and 24% over these 5 trading days. So, Pete, there's a lot going on here. China kind of reopening a little, especially on the internet, not so much in bricks and mortar.
Yeah. And John, we're seeing a lot of upside buying all week long. If you go all the way and start at the beginning of August, you can see all kinds of different option paper that's been coming in there for a long time. Multiple hits in the KWeb that you were talking about. I mean, we're talking from 2,500 all the way to 15,000 calls being bought at chunky amounts. And so I think when you look at, the names like PDD and Baba and Baidu, they all performed this week, John. Does that mean they're going to continue? Maybe, but we're just basically just watching how close this is correlated to everything that's been going on and the reopen in China actually, because a lot of people don't even know it, John, but how many people realize that they've still been going into these zeros, these lockdowns and everything else? They have been, but they're trying to come out of that. And it looks like they're starting to progress pretty well.
Well, what about, speaking of progressing well yesterday, but not so much today, your favorite clothes hanger, Pete, Peloton.
Yeah, the most expensive clothes hanger. Boy, did I catch flack for that, John. I had so many guys coming after me on the internet, on Twitter, on social media. Oh, Pete, you don't know what you're talking about. I think I do. I've gone through a lot of iterations of things where people will buy something for their home and then they stop using it. And our father was a great example of that, John. And these guys, when you look at the balance sheet, do they make money? The answer is no. Do they burn money? Oh, absolutely. It's only at a clip of about, what, $1 billion or whatever? I mean, not a big deal. But when you look across and you look at their entire balance sheet, John, you've got, well over $1 billion in debt. You've got a company that just struggles to ever make any money whatsoever. It's got a 14% short interest for all the right reasons. And now you've had that big pop because Amazon said, you know what, we think we can do something with this company. And I actually agree with them. I think they potentially could. But certainly Peloton has not been able to achieve that, John, because when you look at it and you look at how much money they're losing quarter after quarter after quarter, and they just reported, I mean, this is a stock that started the year at 36. It's been as low as underneath $9. And here we are just sort of floating around. It is a very expensive clothes hanger still.
Pete, and that stock, folks, was $151 on the highs. Maybe just a little bit more than that. So I'm agreeing with Pete. Yeah. I would say beneath 12, I would be a buyer, Pete, on a shot, but otherwise I'm not interested.
Yeah.
CRM, this is salesforce.com. Pete is actually pretty good friends with Mr. Benioff, and I respect the heck out of him, Pete.
Yeah.
He's built a great company. He bought Slack last year. And basically now they've approved their first ever $10 billion for their first ever buyback. That's a big buyback, but the fact that they gave guidance that was well short of estimates, Pete, is why that stock is down hard today.
Yeah, getting hammered pretty good, John. I mean, I think, it's not something that we're used to hearing from Benioff and the group at Salesforce. They usually seem to be able to get their way and do pretty well navigating through very difficult times. We all know how difficult things can be. And, when you look at what they've had to deal with, it's very understandable. Now, all of a sudden, they're in a position where things are opening up a little bit more, and that's good for all of us. It's not good for every company that's out there, because in some cases, a lot of these companies did extremely well, John, during the pandemic because of all the different things that they had going for them. But, when you look at this company, I think it's a great company, but does it get in front of itself a little bit sometimes? I think the answer is absolutely it does. So I think it's not necessarily a buy on the dip kind of a thing. I think you can be a little bit more patient, because I think the rest of the market still has a little bit of room for some correction there as well. John, we're going to jump to the next one right away. Snow.
All right.
Now, this one's great. Cloud platform. You've got an amazing amount of revenue. When you look at the beat that they had, that was extraordinary. They did a lot of things right, but let's not forget, this is a company like many others where during the pandemic, it got over 300, John. I think it got close to 400. It was at 400 actually in November of this past year. It dropped in June all the way to 120. And here we are now, once again, kind of flirting with the 200 number. And they did deliver on a lot of different things that we expected them to deliver, but you still got to look at the balance sheet. You still got to look at a lot of different aspects of what this company has right now. It is a great balance sheet, but can they make money? What's their PE? It's 1250. That's not it's 1,250. That is their PE right now.
Wow. Well, and Pete, this is one that Warren Buffett believed in when it was a private company. He held it into the IPO, which means that in all likelihood, he was locked up for at least a year, Pete. Usually the way it works is 6 months for half of your holdings and 6 months for another half. Mm-hmm. So was he able to sell very much up there at over 400? This was a huge offering when it came IPO, but I'm sure even though the return, he would have loved to have sold it up there, still at 200, Pete, and a $61 billion valuation. Yep. I'm sure Mr. Buffett's a pretty happy camper. All right, let's get on into some unusual option activity, Pete. We were wrestling with these folks because Pete and I both had FCX, and then we said, nah, we're gonna put in a new one. So mine is Hood, Pete, HOOD, and this is of course Robinhood. And one of the reasons that I liked this one, Pete, was that Robinhood has attracted a lot of interest from FTX, which is Sam Bankman-Fried. He's got a lot of money. He has pumped hundreds of millions of dollars into Hood shares, buying them up and basically going into a 13D, basically disclosure that he's bought that much. below 10, I'm going to say the same sort of thing, Pete, that I said about Peloton at the top. I would be a buyer below 10. And so I established positions in here. They're buying upside calls. I think at this level, the risk reward favors the buyer rather than somebody shorting it. So that's the way I feel about Robinhood, HOOD.
Well, and John, I'm going to jump on one that's not been able to make a move yet, but maybe it can in the near future, which is Carnival Cruise. Now, this is one of those names where when you really look at it, John, from where it came from, and then you get to March of 2020, stock absolutely obliterated, right? I mean, it just got absolutely slammed, probably for all the right reasons. It got all the way down to $13 a share, jumped back up towards 30, not too terribly long after that, and then was flirting around in the 20s. Well, it's back basically down to those pandemic lows, or at least near those. But we've got a buyer of 15,000 of the September 11.5 calls with the stock trading just beneath 11. What makes that interesting, John, is we're not betting the farm that this thing, or that buyer's not betting the farm that this thing's going to absolutely scream to the upside, but looking for a little bit of upside based on the fact that it is down not too terribly far from those pandemic lows. So could it happen? I think it could. I actually bought these calls myself. They're going for around 40, 45 cents. I thought that the risk reward I liked, but I at least know my full risk. I mean, just so people understand, little education here, you buy calls, that's the most you can lose. That is the most you can lose. It's a little bit different than doing things in the stock world and everything else. But, you know, my 45 cents, could it go to zero? Absolutely could. The stock might not make that kind of a move, but I like the what I'm seeing, and a little bit of an encouragement from the size of that buyer. So I like this enough that I was buying along with it, John.
Yeah, and I like that too, Pete. And I think for the people that don't trade options, we know we're not going to convert all of you into option traders, and not all of you should trade options, quite frankly. But if you dedicated yourself to learn a little bit about it, like coming to RebelCon, shameless plug, you should be able to do what Pete just did. Invest 45 cents instead of investing bigger dollars to control the stock. The trade-off is it's for a limited amount of time. So always keep that in mind when we're talking about the unusual option activity. Now, Pete, I know on your television and radio show on WCCO, you talk about NIL a lot, which is name, image, and likeness. Tell me what's got your underwear in a bundle right now based on what's going on with some of these NIL.
Well, it's a great question, John. And you and I talked about some of the NILs with the offensive linemen with Hooters on Tuesday. It's really interesting. It's great to see the big fellas finally getting rewarded, right? Because when you look at it, John, and I'll just read off a couple of them because you're going to see a theme here. Arch Manning, $3.4 million. The guy's a freshman or whatever at Texas commit. And $3.4 million. What is he? Well, he's a quarterback. Bryce Young, Alabama, $3.2 million. What position does he play? He's a quarterback. CJ Stroud, Ohio State, $2.5 million this guy's going to be making. John, these guys are basically getting paid to go to college and do some very easy, quick thing where they do it. Now, some of them are fun. We talked about DeColdest the other day, the wide receiver at Nebraska. He's doing a little promo for a heating and cooling company. But John, these numbers are outrageous what they're getting, and it's about the haves and the have-nots. And I think the fact that there's no regulation, people get mad about no regulation in crypto, right? Well, there's no regulation in this. And the problem that you're seeing right now in the NIL world is who's paying the big money? Well, it's USC. It's all the schools that you would expect that can have the money. There's a lot of schools out there that just don't have those kind of same means. And I think that's becoming a bigger and bigger problem. There's going to have to be some kind of regulation of some form of limit or something, John, to make it a little bit more fair across all the fields, in my opinion. But Jordan Addison's the last one that I'll give you. He's a wide receiver. He just got $2 million. He's around $2 million. United Airlines is going to give him his NIL sponsorship or whatever you want to call it. But it is amazing, John, just to see what the money flows look like, what the schools are, and what the positions are that are really paying out these athletes. It's absolutely extraordinary.
Yeah. And Pete, I think it's also part of the idea that a school like USC, the wide receiver you just described, USC, why were they moving into the Big Ten? Because they need a bigger audience. You get that bigger audience, you get the bigger bucks. So it's as simple as that. I do agree, Pete, that it's going to really benefit the haves that are in the big conferences. It's going to be really tough, even for Coach Prime, to compete. That's Deion Sanders, of course, but he has won over some players, Pete. But, you know, it is really tough to get a small school, a historically black college or university, for instance, like Grambling or some of these other schools that just, I don't know how they could compete, Pete. And that makes me a little nervous about, you know, the rich get richer and the poor just kind of disappear maybe.
Yeah, it's unfortunate. Going to the NFL, John, one thing that I've been observing, and we talked about the shrinking linebackers not too terribly long ago. When I was at Viking camp and I was there with the 49ers, I was bigger than every single linebacker on the field, which is an unusual thing, you know, especially a 50-plus-year-old man. And I'm standing there and I was just absolutely blown away with the size. I know there's speed in the NFL, but I think there are a lot of teams out there that are understanding this. And there's always that movement, right? You go from passing to running, and it all is predicated on what? Well, it depends on how big the defense is. You got a big offensive line. Everybody's got a big offensive line, it seems. And then all of a sudden you can take advantage of that. Well, one of the other things that's been happening this year in the NFL, John, is we're seeing, I think, more injuries than we've seen in a really, really long time, especially to some of the star players. I mean, I was just looking through my list. I've got Zach Wilson. Now, he's only out short term, but, you know, nonetheless, a quarterback, your starting quarterback, number 2 pick in the draft for the New York Jets, he's out right now. Will be out for, I think it was something close to 4 to 6 weeks. So that's something that happened during a game. How about the Dallas Cowboys? Tyron Smith. This guy is the best or one of the best left tackles in all of football, right? I mean, the guy's an absolute freak show from USC, built like a Greek god. He's got issues. He actually had his hamstring tear off of the bone, which means this guy's going to be off the field for quite a long time, maybe the season. They said maybe December. You also have 2 wide receivers for the Dallas Cowboys that are right now in bad shape as well. Gallup being one of them, Washington's the other one. David Bakhtiari, the offensive tackle for the Green Bay Packers, he's hurt. Chase Young, Washington, he's hurt. I mean, you've got a lot of big name players on a lot of these various teams. You can see that Dallas is one of them that's getting hit hard. But the injuries, John, I'm not sure what to attribute it to, other than the fact that maybe these players are trying to use camp to get in shape like they did years and years and years ago. That might be a problem. What do you think?
Well, it could also be something, Pete, that we have to have an extended conversation about performance-enhancing drugs. The players know that they're only going to be tested once unless they have a DUI or some other arrest. They're only going to be tested once. And so you have to be clean for that one test in training camp. And so maybe, Pete, a lot of them have really, you know, because I'm going to tell you something you all know. Virtually every one of these players is juicing. Virtually every one of these guys are juicing. And that's how you get a guy that's 6'7" and 295 pounds that can run a 4.6. That freak show didn't happen without a little help. And it's not just in the weight room, Pete. We both know that. But anyway, longer conversations some other time. You want some great conversations? Sign up for marketrebellion.com/Dallas. That's marketrebellion.com/Dallas. A few, and I do mean few, in-person tickets are still available. The rest are virtual. And at midnight tonight, the virtual ticket goes up $200. So if you want to save $200 right now, go to marketrebellion.com/Dallas. That's marketrebellion.com/Dallas. You can sign up in person or remote, and we will see you next week.
See you Monday.